Here are 5 critical steps you must take after opening up your Dubai company. We open companies in Dubai every single day, and here's the pattern I keep seeing. People rush to register, they get excited when their visa arrives, and then silence, they stop. They think they're done, but here's the truth. You've only just begun. Dubai isn't what it used to be. Today, if you don't get your taxes, accounting, and VAT sorted right after registration, you're looking at serious fines, blocked bank accounts, and even criminal charges. So let's walk through the 5 most critical things you need to do right after getting your license. And trust me, one small mistake can cost you 10,000 dirhams or worse. Hey everyone, I'm Richard from Connect Group. We help with business setup in the UAE, and we've been doing so since 2016, from licenses to staffing. And here are the 5 steps you need to take right after launching your company. The first step is something most founders don't even think about until it's too late. You've got exactly 3 months from the date of registration to file for corporate tax. Yes, even if you're in a free zone. Yes, even if you're not making money yet. And yes, even if you don't have a bank account yet. Everything is done online through the FTA. It sounds easy, right? Not quite. You'll need to submit all of your company info in both English and Arabic, even if you don't speak a word of Arabic. And choosing your business activities can be a mess. Each free zone uses different codes, and they often don't match the tax system. So please don't try to wing it. If you get it wrong, you'll be either stuck in limbo or you can face some fines. Oh, and if you miss the 3-month deadline, that's an instant 10,000 dirham penalty. But here's the trick. If you file your tax return early enough, say within 7 months instead of 9, you can cancel that fine. The second step is opening up a bank account. Banks in the UAE are extremely cautious now. They want to see exactly where your money is coming from, especially with global FATCA rules, crypto restrictions, and extra compliance checks in place. What works best is this. Start by transferring your money to your personal UAE account first. Then you move it from there to the company account, and that way it's official and it's transparent. But even getting that company account open can be a challenge. Be ready with your documents, your proof of funds, and a clear explanation of your business model. If you're unsure about how to open up a bank account, what the restrictions are, what the different risk levels of certain activities carry, speak to me. I'm always available for a free 30-minute consultation. We work with great consultants and we have a lot of experience with opening bank accounts. So click on the link below, book a call with me and we'll discuss. The third step is paying your share capital. And yes, this is now a very big deal. Before corporate tax was introduced, nobody cared whether you did this or didn't do it. Now, it's one of the most important things that the tax inspector checks. Once your company account is open, transfer your share capital directly into it. And the good news is you don't need to freeze this money. You can spend it on business expenses from day one. Rent, software, salaries, whatever you need to operate, you can use this capital for that. Just follow one rule. Your account must record it properly, either as a share capital or shareholder loan, and it just depends on how you structure it, but either one of those are fine. This is a simple step, but skipping it or doing it wrong can cause serious problems later. So handle it early and handle it right. The fourth step is choosing your accounting system and who's going to run that system. In the UAE, you're required to use approved accounting software. There's an official list of more than 30 systems. So choose one of them, but don't rush to pick a random one. First ask yourself, are you going to do the bookkeeping yourself? Will you hire a full-time accountant? Or will you outsource everything? If you're handling it on your own, tools like QuickBooks, Zoho, to name a few, are simple and they work great for small service-based businesses. But if you're in trading or logistics and you need inventory control, you'll need something more advanced, like Odoo or even 1C if you know it well. But here's the big mistake most people make. They choose rare software, and then trying to find an accountant who knows how to use it can be the biggest struggle. We've had clients looking for a specialist for 4 months because they picked something too niche or something that no accountant knows how to use. So just flip the process, find the accountant first, then pick the software that they recommend. This will save you a lot of headaches. But before the next step, don't forget to subscribe so you don't miss our videos on how to save money, avoid fines, and grow your business in the UAE. The fifth step is the one most people overlook until it's too late. Everything's going well, your company's working, you've started invoicing clients, and then all of a sudden you cross a threshold you didn't even realize was there. Once your total turnover hits 375,000 dirhams over the course of 12 months, you must register for that. And here's where it gets a bit weird. In the UAE, you now have 2 separate tax numbers, one for corporate tax and one for VAT. They don't even overlap. They don't sync, and yes, they have different reporting schedules. Corporate tax is once a year, VAT every quarter. And those quarters probably won't match the calendar year either. In our group of companies at Connect, we literally have 15 businesses, and each one is different VAT quarters. It's absolute chaos. So you also need to update your invoice format after VAT registration and keep track of when these filings are due. If you're missing the required details, that can be a 2,500 dirham fine per invoice, which doesn't sound that crazy, but it stacks up. You've got 2 options. Option 1, you can add 5% to your service prices, or option 2, you can absorb it and then cut that 5% out of your profit margin. Either way you cut it, the moment you start getting close to that 375,000 dirham threshold, you go straight to your accountant and then get ready. So funding a bank account, a corporate account, opening it, it's all very complicated. Luckily for you, we've covered that in a video. So click that link, go watch it, and then we get into more detail about how to do it the correct and compliant way.